Good afternoon, friends. Today I am in my 29th class of accounting. The topic which we have got started the day before yesterday, and the topic is final account of non-trading or non-profit earning concern. For recapping, I would like to let you know what I have discussed yesterday, or in the foreground days. Accounting is the language of the business. Fine. Now, accounting is required where the question of flow, inflow and outflow of cash are there. So, the question of inflow and outflow, these relate to transaction. Transactions are recorded in the book of prime journal, then posted, casted and balanced in the book of ledger. Then we get the summarized accounts, the summary of the different accounts, and we make a summarized statement, and that is known as profit trading and trial balance. Then with the help of the accounts which we have prepared, the accounts which we have got on summarization, there are three types. One is expense, one group is expense and income, loss and gain. They are known as nominal accounts or revenue accounts, and the other balances are debtors account, creditors account and assets and liabilities. So with the help of assets and liabilities, debtors and creditors, we prepare balance sheet or statement of affairs, and with the help of the income and expenditure, losses and gains account, that is nominal account, we prepare a final nominal account, master nominal account, and that master or comprehensive nominal account for the year concerned, and that is known as profit and loss account in case of trading account. That we have already done. Then, so far we have considered only the profit earning concern, that is the organizations which are concerned with the basic objective of earning profit. But there are organizations which do meet expenses, do receive the income, they are not concerned in, not engaged in earning any money, not any trading concern, not any manufacturing concern, not any industrial house, not any merchandising organization. These organizations have the motto of some social service, and these organizations, the basic motto is social service, and these organizations are regarded as non-profit earning concern or non-trading concern. So non-trading concerns are those concerns which are not concerned in earning money, whose basic objective is not to earn money but to extend some social service. Okay, although these are some surplus for the maintenance and the development of the organization, still the basic objective is to extend social service. Now, as that a merchandising or industrial organization, they also make transactions, and they must keep the records, journal, ledger, and trial balance. And they must prepare a statement which would show what is the amount of surplus they have generated during a particular period concerned, or what is the amount of depreciation they have made. And that is the final account of the non-trading concern, and the name of that account is income and expenditure account. So, income and expenditure account of non-trading concern is exactly that profit and loss account of a trading concern. So, it is prepared with the same pro forma, it is prepared with the same logic, it is prepared with the same reasoning. Okay. So, income and expenditure account is a statement of all the revenue items, all the nominal items. In case of profit and loss account, we have seen, we have credited trading and profit and loss account, we have credited all the incomes and we have debited all the expenses and losses, and we have created all the incomes and gains. With the same logic, with the same reasoning, with the same pro forma, we will prepare income and expenditure account. Yesterday I have told you that each and every organization is interested to know the results of the transaction taking place during a particular period. That period, it may be say 3 months, it may be 6 months, it may be 12 months. So during this period, what is the ultimate result? What is whether the profit earned or whether the loss has been sustained, or in case of trading concern and merchandising or industrial concern, or in case of non-trading concern, what is the amount? Whether we have generated any surplus, that is excess of income over expenditure, or we have made some losses, the deficiency. We had to present a deficiency that is excess of expenditure over income. So that is that information we get if we prepare the income and expenditure account. The income and expenditure account has the same logic as that of profit and loss account. With that premise, I am going to solve one problem on income and expenditure account. For preparing income and expenditure, you need some information. The information is basically given in a statement, and that is known as receipts and payments account for the year ended. Okay, for the year concerned. Okay, so it is as we have maintained cash book all through the year. The non-trading concern also maintain the cash book for the whole year, but they prepare a summarized form of cash book, and that is known as receipts and payments account. Receipts are debited and payments are credited. Just you see in the cash book, all the payments are in the credit side and all the receipts are on the debit side. Okay, and here the receipts and payments account also. Here we see the general expenses made 1,600, salaries rupees 4,500, electric charges 1,200, books, purchase of books that is 6,500, printing and stationery 700, sports equipment purchase 8,000, newspaper and magazines 3,200, sports expenses 600. Okay, so these are the different payments. Yes, yesterday I have differentiated payments and expenditure. So the payments which have been shown over there, these are the summarized statement of all the payments made during the year. These payments, you just scan the payments. Some payments are revenue in nature, as that of general expenses, revenue, because you have to incur these expenses every year. Okay, so it is revenue in nature. Salaries, it is revenue in nature because you have to pay salaries periodically. Electric charges is also paid periodically. But book is your asset. So it is a capital payment, and as you have done in case of final accounts, the capital payments are treated as an asset. So books are your asset. So books should not be treated as your revenue item. It is a capital item. Only the depreciation of the book, that is the loss of the books you have used, that will be treated as a revenue loss. Okay. Printing and stationery, revenue item. Sports equipment, as that of books, they are the assets. Okay. This is capital expenditure because sports equipment are not. Sports equipment, once it is purchased, it is used for a good number of times. Okay. Although the depreciation may be high, so sports equipment is a capital in nature and it should go to the balance sheet. Only any depreciation on it would be considered for the purpose of preparation of income and expenditure account. Newspaper and magazine is to be incurred in each and every month, so it is revenue in nature. Sports expenses, revenue in nature, and the balance sheet is the cash balance sheet. You go to the balance sheet. So these are the payments. So cash receipts and payments account, credit side. So the different types of payments. The payments are capital in nature, the payments are revenue in nature. Only the capital payments will go to the balance sheet, and the revenue payment will come for the purpose of preparation of income and expenditure account, because these are expenses. Clear? Now come to the receipt side. In the receipt side, it is balance, it is the opening balance of cash. Now, what are the different under the different things? You have received the amounts. You have received the amount as subscription. And basically in any non-trading organization, club, library, and like that, subscription is the main source of revenue. It is a revenue item. Donation may be two types. It may be regular, irregular. As you go on conducting your sports or any other event, you go on collecting donation. That donation is revenue in nature because you collect it every month. But whenever you are receiving donation for building is a capital expenditure. So in any donation, if you have taken 10,000 from me as a donation for construction or building of your club, so again you should not come to me. So it is a capital in nature. So it will go to the balance sheet. Okay. And entrance fee is the amount which is to be paid. It is known as the admission fee. Whenever you are taking the registration, you are getting the registration or the membership of any organization. The organization is charging that amount. Clear? And that amount you are not supposed to pay that amount in the coming year also. So it is generally revenue capital in nature. But since every year some members take the admission, so we have the custom of considering a part of industry as revenue, okay, and part capital. Interest on investment. Investment is the amount invested somewhere. Somewhere it has been to generate some earning. Okay, so your investment is your asset, and that asset has given birth of what? Given birth of babies. Okay. So these are the interest on investment, and each and every year you will be getting this one. So it is what type of receipt? It is a receipt, but it is not capital. It is revenue in nature. Investment is a capital investment, capital in nature, but interest on investment is revenue in nature, and investment is capital payments. So it will be treated as an asset. Sale of old furniture. So you have the furniture. You have purchased furniture. You had purchased furniture. The furniture has been used for a good number of days. Furniture is your asset, and you are selling those furniture. How many times could you sell the purchased furniture? There is once, only for once. So this is capital earning. But mind it, whenever you are selling old furniture, the cost of furniture may be higher than this. So the loss of that thing should be treated as a loss, and it should come in the income and expenditure account. Now, sale of old newspaper. Sale of old newspaper, every year you go on selling newspaper, old newspaper, so it is your revenue income. Okay. So this payment side, receipt side have two categories. One is revenue in nature, which we are generating every year, and some which we are generating once for the lifetime. So which is once for the lifetime is treated as capital in nature, and it will not come over here, and which is revenue in nature should be treated for the purpose of preparation of your income and expenditure account. Clear? With that premise, I have already solved the problem. I am making the total discussion on what I have done. I am taking up the income side. The opening balance sheet is your opening cash, opening asset. It should not come in the income and expenditure. Should it come? Now subscription. Subscription is your revenue item. Okay, so this is your income. That is, I have written the subscription. How much it is? It is 17,500. So this year you have received 17,500. But some information is given over here. Subscription include rupees 5,000 relating to 2019. So the subscription which you have received for 17,500, out of that a part of subscription relates to the previous year. Is it the income of this year? No. So it is, you have received this amount which was due in the last year. So that is not concerned with this year. So it should be deducted. Clear? Because it is not concerned, we are preparing income and expenditure account for the year ended 2020. So does it relate to 1920? No. So it relates to 19. So it has been deducted. Clear? So 5,500 is deducted. We are getting it 17,000. Now see some other information which is relating to subscription. The subscriptions having been intended for 2020 are still outstanding. So this year the subscription is due. A subscription is due, but you have not received. Subscription is due. How much? It is due 700, but that has not been used. That not been received. Okay. So it relates to which year? This year, but you have not received. Since it was which was due in the last year, but not received. That you have received this, and that has been deducted. And the amount which is outstanding is 700 is to be it has been added. So the total in terms subscription should be 17,700. Clear? Now one thing is that you have received some advance subscription, that is you have advance for 2021. It relates to 20. Does this amount relate to 2020? No. So but you have received it, so it has been deducted. Clear? So now I am giving you the more or less the principle. Any advance outstanding should be added. Any advance should be deducted. Clear? And any area of the last year received this year should be deducted. Okay, but any advance received, say you had received in advance in 1990 200 for 2020, that would have been added. So the things which has been added this year was added to the amount which was an outstanding this year, that has been added, and this year we have deducted. Clear? So this is related to subscription. Any problem? Then comes another important thing, that is donation. Donation may be of two types. One is capital in nature, one is revenue in nature. Capital in nature for building, for purchase of furniture, for and like this. But any donation for conducting any sports events or other, the sports events you conduct every year. No? Although we prepare a separate account for sports, anyway, so these are revenue items. But here the donation. Regarding donation, nothing has been, there is nothing in your problem. No? So I am not considering the donation part. Clear? The donation the donation which is capital in nature should not come over here. Okay, it should go to the balance sheet. And the donation which is revenue in nature should be treated as the income. So it would come over here. But although in our problem there is no such donation. Donation, I am writing donation, revenue. Nothing is over here. Clear? So then comes another important is entrance fee. I have already told you that entrance fee is given only once. So entrance fee should be treated as a capital expenditure and it should go to the balance sheet. But every year there some members get admission. Okay, so every year it generates. So a part of the entrance fees may be treated as a revenue expenditure, revenue income. Here in our problem, what is stated? 60% of the entrance fees is to be capitalized. So entrance fees is an income and 60% is to be capitalized. So how much percentage? Something wrong over here. Yes. So it is 40% that is to be revenue. Okay. So the entrance fees how much? It is how much? How much entrance fees do you receive? 2,500. Okay. 2,500 is the entrance fee. 40% revenues. 60% capital. 60% means 1,500 and it is 1,000. Okay. So only the revenue part, that rupees 1,000 should come in the income and expenditure account. Clear? And another 60%, that is 1,500 should go to the balance sheet. Clear? So that is 1,000. Okay, so clear. Now entrance fee gone. Then comes interest on investment. How much? Interest on investment. Interest is your regular income. So investment is your asset, and this asset is generating asset, and it is generating asset every year, and that is interest on investment. How much? 200. Okay, and here something is written. Interest on investment accrued rupees 400. So you have received the interest on investment 200. It is an income. But how many due? Accrued means due. I mean the concept is that whenever any income is remains due, so we say accrued. Okay. And in case of expenses, we write outstanding. Although the meaning is the same and the treatment is the same. So interest on investment accrued. How much investment? Interest you have received 200, and due how much? 400. It is 6,000. For this year, you are expected to income earn rupees 600. You have earned it, but not received. Okay. You have earned rupees 600, but you have received how much? 200. So 400 is due, and this 400 should be treated as an asset, and it will go to your asset balance sheet asset side. And then sale of furniture. Sale of old furniture, how much? 1,250. Sale of old furniture. How many times would you sell your old furniture? Old furniture will be sold once, so it is your capital receipt. Okay. But one thing is that the value of the book value of the furniture sold is how much? 1,500. So what is the loss? The furniture which is going out 1,400, and what is the amount you are getting? 1,250. That means you are beating a loss of rupees how much? 150. So it is a loss. I am writing over here. Okay. Loss on. Okay. So loss on sale of old furniture. Sale of old furniture. How much it is? It is 150. So there must be changes to change in this figure. Here. 150. So it would be 600. Just friends, you should please check the balance. Okay. Here. So sale of old furniture is your earning, but the amount which you have lost, the loss on sale is your loss, and that is revenue loss. It should go to the income and expenditure account. So the total value was 1,400. You have received 1,250. So 150 is your loss on sale of furniture. Clear? And then sale of old goods is revenue income. So no problem. And it has gone to the income and expenditure. Clear? So this one I think clear. Any problem? Then comes the expense and general expenses. Obviously, it is an expense and it has come over here 1,600. The salaries for 4,500. The salary outstanding is 200. Salary, you know the treatment of salary. The salary outstanding salary should be added. Advance salary should be deducted. So it is 4,700. And electricity charge revenue. So it has come over here 1,200. Book is your asset. It should not come in it should go to the balance sheet, not in income and expenditure account. Then printing and stationery, it is revenue item. You know all these things as you have done in case of your final accounts. The printing and stationery over here. Now the question of what? I have already told you the loss on sale of furniture. Furniture sold was rupees. The book value was 1,400, but you received 1,250. So 140 is your loss, and that loss should be treated over here because income and expenditure. Income expense side includes also the losses. Here. Now this book is your asset. So it should not come over here. Sports material equipment is your asset, not come over here. Newspaper and magazine regular expenses, so it should be treated over here as newspaper and magazine 3,200. Okay. Now sports expenses 600. It is your revenue item or 600 sports expenses. Clear? Now it is balance sheet. Balance sheet. We will go to the balance sheet. Balance as a cash balance. But here is something here. So 50% interest fee gone, salary outstanding gone, interest on investment gone, then depreciation on books and quotes equipment at the rate of 10%. You have purchased book. Book is your asset, it will go to the balance sheet. Clear? You have purchased some ports equipment, it is an asset, it will go to the balance sheet. But you have used this material, no? So there must be some depreciation. The depreciation should come. So depreciation is the loss in the value of asset due to use and wear and tear. You have used. So here it is the depreciation on building and sports equipment 10%. Here, what is the amount of book? 6,500. So 10% of it what? 650. And sports equipment how much? 8,000, and it is 800. Okay. The total is 1,450. Here. Now one thing I will let you know. Friends, one thing is stated, very, very important. The depreciation on building books and sports equipment, it is written exactly the 10%. Clear? 10%. But here I have not considered the time. If it is written depreciation per annum. Understood? Depreciation per annum. That means you are to charge depreciation at the rate